There's a very good saying, the best investment you can make is an investment in yourself. The more you will learn, the more you will earn. And just like every building requires a solid foundation, your financial journey also requires a solid foundation. Now, when I started my financial journey, I was totally confused. I had no clue about how money works, how to make the right investment decision, and above all, how to avoid all mistakes related to money. I knew that I did not want to play a short-term game. I wanted to create wealth in a consistent way for the long term. And when I started my financial journey, I came across some of the finest books ever written on personal finance and money management. These books helped me set up a solid foundation in financial journey and literally transform the way I think about money. So in this video, I'm going to share 3 top books that I would encourage every one of you to read. No matter whether you are an engineer or a doctor or a government employee or a businessman. These 3 books will immensely help you in your financial life. Alright, let's get started. So the first book is Rich Dad, Poor Dad. This book has been very instrumental in shaping my thoughts around money and personal finance. This book is about 2 dads, a rich dad and a poor dad. Poor Dad was author's biological father, a man who was highly intelligent and very well educated. He believed in studying hard and getting good grades, and then finding a well-paying job. Yet despite these positive attributes, Poor Dad did not do well financially. On the other side, Rich Dad was father of author's best friend. He had a similar work ethics to author's real dad, but with a twist. Rich Dad believed in financial education and learning how money works and understanding how to make money work for him. Although he was an 8th grade dropout, Rich Dad eventually became a millionaire by putting the power of money to work for him. One of the biggest takeaways from this book is to focus on learning rather than earning. I think this is one of the biggest problems with young people in India. Their only focus is on earning. You go to any engineering or MBA college in India, the only focus is high package. Nobody really look at the profile as long as they are getting a good salary. And if you ask 100 people if they prefer a better job profile or higher package, I'm sure more than 90% of people would opt for a higher package. The next big takeaway from the book was to focus on financial education. Unfortunately, financial education is not a part of school curriculum in the world. So he took the example of how people in America end up falling into debt traps at a very young age due to lack of financial education. And this is exactly the case in India. The young people are spending money more than they earn and falling in debt traps. Majority of them have no clue about how to invest money, how to take the right insurance, how to save taxes, and how to live a financially comfortable life. I've seen people earning 1 lakh a month but struggling to save rupees 10,000. But after being inspired by this book, I spent hours learning every concept of personal finance and ensured that I do not end up falling in debt traps and take right investment decisions. So there's a very good paragraph in this book. It says, money is one form of power, but what is more powerful is financial education. Money comes and goes, but if you have the education about how money works, you can gain power over it and can begin building wealth. The reason positive thinking alone does not work is because most people went to school and never learned about how money works. So they spend their lives working for money. And one of the best lessons from the book was, rich people acquire assets whereas poor people acquire liabilities, but they think that they are asset. The book says that rich people invest in income generating assets like businesses that do not require their presence. Then stocks, mutual fund, bonds, income generating real estate, royalties, or anything that produce income or appreciates. Whereas poor people, rather than investing their money, end up buying luxuries like diamonds, watches, big houses on loan and credit card. They look rich, but in reality, they have a huge debt to pay. In short, the book says that the poor and the middle class work for money and the rich have money work for them. So this book was really an eye-opener and a must-read for everyone who wants to live a financially comfortable life. Although there are a lot of controversies around this book and people say that majority of story from the book is fictional, but it is still worth a read for young people. Now, if you have invested your money in stock market or are willing to invest, then you should do one more investment. It is to spend your time reading The Intelligent Investor. And I can assure you that it would be one of the best investment of your life. Written by Mr. Benjamin Graham in 1949, The Intelligent Investor is one of the masterpieces in the world of investment and very relevant even after more than 70 years of publication. Now, I'm not saying that by reading this book, you will generate multi-bagger returns. But one thing you will learn is how to minimize your losses. Unfortunately, majority of people who invest in stock market only look at one aspect, high returns. And they miss out on the other side of investment, which is high risk. This book helps you understand the risk aspect of stock investment and how to minimize the risk. This book clearly differentiates an investor from a speculator. It says that an investor is someone who invests on the basis of real value of the stock with proper research, whereas a speculator would just gamble with a hope that price would go up. To be really honest, stock market has more speculators than investors who buy the stock with the hope that the stock price would go up because somebody else will pay even more for it. The book says that people who invest make money for themselves. People who speculate make money for their brokers. Now there are a lot of people who want to double their return from the stock market in no time. This book has given a beautiful example why this idea could be disastrous. It says, imagine two places are 130 miles apart. Now if you drive at 65 miles per hour, you will cover the distance in 2 hours. But if you drive at 130 miles per hour, you will cover the distance in 1 hour. So should you drive at 130 miles to reach quickly? Well, you might survive at that speed, but that doesn't mean you should drive at 130 miles per hour because chances are high that over the time it will get you killed. Then one very important concept this book has discussed is margin of safety. I think this is one of the most relevant message in today's time. So what has happened post-COVID is that investors rushed to buy growth stock at any valuation. Since there was a FOMO, nobody wanted to miss out on growth stock. Hence, they purchased the stock at ultra high valuation. But eventually, majority of growth stocks have corrected more than 30% from its peak. And that's where margin of safety is very, very important. It basically means not to overpay for the stock, no matter how exciting a business might look like. Although it is very difficult to identify the right value of a company, but you can still look at metrics like PE ratio to identify the valuation of a company. And if you want to reduce your downward risk, then it is always better to buy a stock when it is available at discount to its intrinsic value. Although post-COVID, when the market zoomed crazily, majority of stocks were trading at higher valuation as compared to their intrinsic value. But now that there is a correction, some stocks have fallen below their intrinsic value. Then third important concept that is covered by Intelligent Investor is to balance your portfolio between quality stock and high-grade bonds. He says that investors should ideally keep a balance of 50-50 between quality stock and high-grade bonds and keep rebalancing the allocation according to the market situation. For example, if markets are at high level, then allocation in stocks can be reduced up to 25% and bond allocation can be increased to 75%. Vice versa, if there is a fall in market and it becomes attractive, then stock allocation can be increased up to 75%. I think that this is a great advice to build a balanced portfolio. Rather than keeping entire allocation in equity, investors should make a fine balance between equities and bond. Here you need not invest in bonds. You can even keep money in debt mutual fund or FD. But the point is not to keep 100% money in stocks and keep on rebalancing the portfolio based on market situation. Now I keep hearing from people that they don't like to read or find it very boring. In fact, to be really honest, it was really difficult for me to read The Intelligent Investor. And it has been a common situation with many people. So I recently came across a platform that provides audiobooks. It is Kuku FM. So it is an audiobook platform where you can find audio version of 1000+ hours of content, including the Rich Dad Poor Dad and Intelligent Investor. And the best part is that you can get these audiobooks and book summaries even in regional languages like Hindi. And these book summaries as well as full audiobooks are available across categories like self-help, motivation, religion, culture, comedy, historical and so on. So you can explore this platform. I personally enjoy their audio content. They have an annual subscription of $399 but there's a 50% off. So you can get the subscription for $199. But this is a limited time offer. I provided the link in the description. Now investment in stock market is not just about having an expertise in economics or finance. It requires a lot of control over the mind. For example, when the stock market increases, people get too greedy. And when the stock market falls, people become too fearful. Likewise, some people end up losing patience in stock market. Then some people become overconfident on a specific stock. So basically, stock market involves a lot of emotion that deals with human psychology. So third book that transformed my financial life is The Psychology of Money. The book says doing well with money has a little to do with how smart you are and a lot to do with how you behave. And behavior is hard to teach, even to really smart people. A genius who loses control of their emotion can be a financial disaster. The opposite is also true. Ordinary folks with no financial education can be wealthy if they have a handful of behavioral skill that have nothing to do with formal measures of intelligence. There's a particular example in this book about greed that I simply loved it. It is crazy how people just want more and more money. For example, the book quoted about Mr. Rajat Gupta, who was an orphan child raised in the slums of Kolkata. He rose to become the first Indian-born CEO of McKinsey, which is world's most prestigious consulting firm. From the slums of Kolkata, Gupta has literally become one of the most successful businessmen. And with this success came enormous wealth. By 2008, Mr. Gupta was reported worth more than $100 million. Now, he could have done anything he wanted in life, but Rajat Gupta wanted to be a billionaire, and he wanted it badly. So during 2008, when Goldman Sachs was at the verge of financial crisis, he got the information that Warren Buffett is planning to invest in Goldman Sachs. Now he knew that when this news would go public, Goldman Sachs share price would skyrocket. So he gave the insider information to his friend who purchased Goldman Sachs and made quick $1 million. Eventually, Rajat Gupta was charged with security frauds and was imprisoned. This completely destroyed his reputation. So constantly striving for more, he ended up with nothing. This is a case of extreme greed. A lot of us have this kind of desire to have more money in spite of already having more than we want. So it was a great lesson of what money can do to us. Overall, there were many good stories in the book that talk about human psychology with money. So this book is worth reading. By the way, this book summary is also available on Kuku FM platform. So in this video, we discussed 3 financial books that transform my financial life. It includes Rich Dad Poor Dad, The Intelligent Investor, and The Psychology of Money. Now tell me in the comments, have you read any of them? And which is your favorite book on personal finance and investment? I'll see you in the next video. Till then, take care.